The greatest wealth comes from investing in innovation. To do that, you have to invest in something that you believe in before others even understand. You'll be mocked and ridiculed for your non-consensus action, but it's totally worth it. To me, Bitcoin has won as the money for the next 5,000 years. So gold was money for the last 5,000, Bitcoin's money for the next 5,000.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free.
Ladies and gentlemen, welcome back to Wealthion. This is Chris Perkins, President and Managing Partner at CoinFund. And today I am very lucky to have a guest by the name of Mark Yusko, founder of Morgan Creek Capital. Welcome aboard, Mark.
Hey, thanks, Chris, and excited to have this conversation and appreciate the invitation.
Looking forward to it. As we begin, would love to just get a little bit of background on you and Morgan Creek. I think a lot of listeners are familiar with you, but for those who may not be, would love to get an overview.
I'll give you a short version, although I don't do short well. My wife will confirm that, but I'll give you a short version. So I'm a left coast guy, grew up in Seattle, ended up in the Midwest for college, came down here from my alma mater up at Notre Dame to North Carolina. We're in the Carolina Blue today to run the endowment. 21 years ago, started Morgan Creek Capital Management, which was basically one of the early firms to bring the endowment model of investing to other investors through an outsourced CIO model. Then 7 years ago, it's a long time, now almost 8 years ago, formed Morgan Creek Digital and started my chapter 3. So my chapter 1, I worked for not-for-profits as an asset allocator. Chapter 2, I ran a asset management, wealth management business. And then chapter 3, I'm a late in life venture capitalist. I always say chapter 4, I'll teach.
Oh, that works out. And I guess congratulations on landing Bill Belichick down in North Carolina.
You know what? Yeah, I'm not a fan. I'm a Carolina fan, huge Carolina fan, not a Belichick fan. This has been the most disastrous year, but our basketball team is great. So I'm focused on basketball.
I went to Navy and we're doing all right. So anyway,
Navy is, I'm a huge Navy fan. And I mean, it's a big place, but do you know a guy, David Jones from down here in Chapel Hill?
I don't. No.
Okay. So, I mean, he might be a couple years older than you, but he's a Naval Academy grad, good buddy.
Very good.
And actually the guy I did an interview with earlier today was also a Navy grad, much older, but lots of great Navy people.
So let's get after it then. Really appreciate your background and history. I usually tend to, I come from the digital asset space. I really like to dive for listeners on that vertical within your career. Can you tell me about, a lot of folks are now thinking about this asset class and they're just like, something is going on here. For me, I had my red pill moment, as we call it. Can you walk us through your journey into the digital space?
Oh, absolutely. And look, I love the fact that you refer to it as an asset class because it is. And there are a lot of people still fight that.
It's crazy.
It is. And at the end of the day, what we're talking about is a technological innovation. And that was the aha moment for me. And again, the shortest version of that is I was super lucky. I joke, my life was the technology cycle, meaning, so 1954, before I was born, the mainframe computer was invented. And my dad happened to be one of those guys who installed mainframe computers into companies. Okay. 1963, I come along. 5 years later, an innovation happens out in Silicon Valley around the microchip. And suddenly not just big companies can have computers, but now smaller companies can have computers. And so I grew up in Seattle. 14 years later, innovation happens around the personal computer. The funny part of the story is I say most of my friends I grew up with don't work anymore because they were smart enough to go to work for Microsoft. I wasn't. Now, I defend myself saying, if you ever seen the picture of the original Microsoft 11, you wouldn't have worked for them either. Now, they're all multi-billionaires and I'm not, so I shouldn't make fun of them, but it's a funny picture. I mean, Bill Gates' glasses were like this big, and the beards on the guys. But 14 years later, now it's always 14 years. Why? Well, it has to do with innovation comes from young people because they don't know what they don't know. So, Mark Andreessen was 19 when he invented the browser, and Larry and Sergey were 21. And so it's 1996. Larry and Sergey are, Stanford students. And we had a chance to invest in Sequoia, and they put 10% of the fund into this company called Google. And I remember like it was yesterday, our board saying, Mark, that's a dumb name. I'm like, okay, yeah, fine. But now it's a verb. So it's a pretty good thing. But more importantly, they said, why would you invest in the number 21 search engine? Like, well, we're not. They don't actually do search. Like, well, what are you talking about? Like, well, they don't actually, when you type a question, they don't actually go search the internet to find your answer. They indexed the internet so they know where the information you want is, so they can send you there faster. That was their innovation. And if you control the flow, because it's easier and better than Ask Jeeves or Web Crawler or whatever, you can charge more to advertisers. So turned out all right. Our 500K turned into 200 million. There should be a quad at Notre Dame called the Google Quad. And the light bulb goes off. I mean, literally the light bulb for my life went off that investing in infrastructure around technological innovation was a big deal. So 14 years later, 2010, and I remember I was actually back in Seattle at Craig McCaw's family office, and I asked his family office guy, do you think the mobile net will be as big as the internet? And he's like, Mark, are you joking? Ask me if they want a computer, like whatever. Ask me if they want a phone, like I already have two. I don't need another one. Yeah, it'll be bigger than the internet. And again, aha moment for me. I was at a traffic light here in Chapel Hill, 90 seconds, right? And I bought a plane ticket on Travelocity. I'm like, yeah, this can be big and big. So e-commerce and the internet and the mobile net did to commerce and media $7 trillion wealth transfer. And we got in front of a bunch of that through investing in venture capital and technology and innovation. So I told you I don't do short well. So 2013, I have a buddy, Dan Moorhead, Pantera. I'm sure you know him and talk to him. So Dan and I go back 35 years. He was at Goldman, then he went to Tiger, where I had a close relationship with Julian Robertson. When he left Tiger to start Pantera Macro, we were first money in. He called me in 2013, said, come to San Francisco, buy you dinner. I'm like, great, have dinner with my friend. Says, Mark, big news, I'm shutting down the fund. I'm like, Dan, why would you give back $1 billion charging 2.20? He says, I'm gonna spend the rest of my career in Bitcoin and blockchain. 2013, I was not running drugs on Silk Road. I was not a cryptography student. I had heard of Bitcoin, but I didn't know what it was. Blockchain, I was in. I'd made 2 investments through Sequoia and August Capital, David Hornak. Blockchain I got, right? It was the new operating system. So 2024, 14 years after 2010, is what I call the truth net, right? We're replacing trust with truth using blockchain technology. So aha moment, and I actually wrote a long piece about this called The Digital Gold Rush back in 2017, where I said, the richest guy in California in the gold rush was not a gold miner. It was the guy who bought the pots and pans and picks and shovels and sold them to the gold miners. He was the first millionaire in California. It's called Yerba Buena back then. And he literally banged on a pan going down the street saying there's gold in the American River and come buy my stuff. $6 for an egg in 1849. So crazy stuff. But the aha moment went off, but I wasn't smart enough to get it right away because I'm a finance guy. I'm a traditional finance guy. And no, Mark, you invest in stocks and bonds and currencies, and commodities. And so I wrote a letter in 2014 to my clients saying, I think this is a big deal. Maybe we should put a little bit in. I got hate. Like, don't talk about magic internet money. You're an idiot. We will fire you.
Yeah.
Wow. I mean, that is a violent reaction. It was a 41-page letter, 1 paragraph about Bitcoin, And they're like, you're an idiot. Like, at least you read the letter. But I let that impact me. And from March of 14 to September, the price went from $500 to 186. I was like, oh, they were right. And then 8 weeks later, it was $1,000. I'm like, no, there's something here. And that's when I did my like super deep dive.
Yeah.
And the little funny part of the story is, a year later, after I wrote the first letter, May of 2015, my son was graduating from Notre Dame. And I said one word, right? Not plastics like The Graduate, blockchain. We were early investors in Coinbase. I said, go talk to Dan, get a job at Coinbase, and it'll be great. And he's wanted to live in San Francisco his whole life, like since he was a little kid. And he's like, all right. And he goes out and he comes back and says, I don't know, Dad, maybe it's going to be a big deal. I'm going to go with KPMG. It's safe, gets me to San Francisco. Like, you're going to hate it, which he did. 9 months later, he quit with no job, which is like a millennial thing. They just quit. Like, no, you get another job, then you quit. But love my son, never asked me for money. 9 months took him to get a job, got a job, and only in San Francisco. I'm really proud of him. His company gets bought by Adobe. His boss gets fired. The new boss says, I need you. So they give him a raise. They give him some stock. Then the old boss goes to a company called Snowflake, hires him away, more stock, more money. They go public, to the moon. It's awesome. But when Coinbase went public, he calls me up and he says, all right, Dad, you were right. I should have gone to Coinbase. But you're not as smart as you think you are. I'm like, oh, I told you work at Coinbase. So yeah, but you didn't lever up the house and put it all in Bitcoin. Like, you little. That is true. I did not, because I was afraid. And so in 2017, I got approached by two young guys, Pomp and Jason, and they had seen me on the internet talking about, Bitcoin's big, really big, blockchain's big, really big. And they said, hey, let's start a fund. Like, we can't just start a fund. Like, yeah, we can. There's no competition. There's Pantera and there's Blockchain Capital. We'll be the third one. Like, okay. And so again, luck, super luck. So we send Pomp, 30 years old, to the first pitch to a pension fund up in DC, goes in, 10, 15 minutes in, the CIO, this amazing woman, Catherine Molnar, says, all right, I get it. I'm in, but it's going to take me a while to get my board in, but I'll find a way. He calls me up. He's like, we're going to raise $1 billion. It's going to be amazing. We didn't raise $1 billion. The next 35 meetings, Chris, over. University of Texas endowment said, get out. Like, you're an idiot. Just get out. So we didn't raise $1 billion. But we raised $40 million, 20 of it from Fairfax. And and I love the fact that last week we sent them back $3 for every dollar they put in, and they still have $5 left. And it makes me happy because they were the visionaries. They took the risk, and their pensioners are the beneficiaries because they believed that it was an asset class. So I said, I don't do short, but this is a long-winded way of saying you're right that this is an asset class. It's the asset class. It's innovation. Yeah. Like, most people think stocks, bonds, currencies, commodities. Those are the four basic asset classes. But innovation is what makes stocks, bonds, currencies, commodities happen.
Yeah. Yeah.
And so if you can focus on innovation, and it's my pinned tweet on Twitter, right? The greatest wealth comes from investing in innovation. To do that, you have to invest in something that you believe in before others even understand.
Yeah.
You'll be mocked and ridiculed for
100%.
your non-consensus action, but it's totally worth it. And if you need to be liked and you need to be right, investing's really hard.
It's really hard.
Because I say this all the time. When you make an investment and you feel good about it, you'll probably do fine. Maybe you make a little money, maybe you lose a little money. And you make an investment and you are super positive, you're going to lose a lot of money. When you make an investment and you're a little unsure, you're going to make some money. When you make an investment and you just feel sick to your stomach, you make a lot of money. And it's really hard, right? We don't like
it's so hard.
Stomach, right?
It's so hard.
No one likes that.
Yeah.
And it's because if you feel really good about it,
So does
everybody
everybody else. So
because
does everybody
there's
else.
comfort in the herd. There's warmth. Everyone says, "Oh, you're so smart. Oh, that's so great." I'm like, no, I want you to tell me I'm an idiot because then I'm onto something. Now, it doesn't mean it will work every time. That's not my point. And it doesn't mean I'm a genius. In fact, I don't have big ideas. I'm not a big E entrepreneur. I'm a little E entrepreneur. I like to build things, but I don't have big ideas. But what I'm actually pretty good at, I have a rule. Hear it once, remember it. Hear it twice, write it down. Hear it 3 times, do something about it. And it served me really well for a very long time. And my favorite example was when I first came down to North Carolina. I've only been here a couple weeks. And if you remember, the Economist magazine in 1998 had a cover story of these guys covered in oil, and it said a world awash in oil. Yeah. And in the article, it said oil was $11. They said, we think it's going to $5, and someday it'll probably be free. I'm like, that just doesn't sound right, but okay, I'll remember that. 2 weeks later, cover of Business Week, Richard Rainwater, God rest his soul, one of the greatest investors of all time, was on the cover, naked long, $900 million of oil. Ripped that baby out, put it on my desk. 2 weeks after that, 3 guys trained by Richard had formed a company called Natural Gas Partners. They did oil and gas. And so I'm like, ding, 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 got to do it. So I go to my board meeting and I say, all right, I want to put 1% with these guys. I want to put 5% in commodities because we had 0. And my board chairman says, Mark, that's the dumbest idea I have ever heard. But if you really want to do it, okay. I'm like, okay, great. So he calls me in the president's office after the meeting. He says, Mark, when I say that's the dumbest idea I've ever heard, that's what I meant. The other stuff was just to be nice. And the chancellor says, well, Max, he's only been here a couple of weeks. If we're not going to take any of his ideas, we should just fire him right now. But maybe we should keep him around a little, try a couple ideas. Then if they don't work, we can fire him. Like, guys, I'm sitting right here. Now, I wouldn't tell the story if it didn't have a good ending. And again, it wasn't me. It was Richard and John and the guys, Ken Hirsch. That 5% we put in energy generated 25% of the endowment's returns for the next decade.
Wow. Because
they thought it was the worst idea they've ever heard.
Yep.
Because if they would have said it's the best idea they've ever heard, we would have done fine, maybe.
Yep.
And so the more hate I got about Bitcoin, I knew it was a good idea.
Yeah.
But here's the problem. We're all human. And we don't like hate. And we don't like people telling us we're stupid. And we don't like people who say, no, I wouldn't do that. And you said it, we got to convince our better half, right? And, or in my case, better 90%. And they're like, oh, I don't know. I don't know anything about this. And I haven't spent any time on it. And one of my favorite parts of this space, talking to smart people and people who also have seen the crypto light, but everyone I know that I respect started skeptical, which is very natural. It's new technology. I need to understand it. I'm skeptical that there could be something, what do you need new money for? Right? So everyone I know then did the work, all but one. There's one holdout. And I think he's just holding out. He's like doing a Peter Schiff.
That's definitely Pomp, right? It's certainly Pomp because he's a friend of mine.
Yeah, certainly Pomp. No. It's one guy, and I won't name names, but it's one guy. And he wrote a book on fiat, so maybe that's why. Yeah. But the point is, every other person I know, from Paul Tudor Jones to Druckenmiller we're talking smart people, like really smart people. They all started like, no, don't talk to me about this. And yet they all have come around because once you do the work and once you understand what a blockchain really is and what Bitcoin really is, you can't unsee it.
Yeah, it's true. It's true. What's your worst idea right now? I have to ask. Come on.
Oh, my worst idea. Okay, love that. My worst idea right now. Chinese solar companies.
Okay.
Yeah, and again, I'll give credit where credit is due. So we have this great relationship. It's a firm called JB Investments, and JB is just the initials of the guys. And they raise a fund like every 3 or 4 years. And so they've only had like 7 funds in the last, 20 something years. And their strategy is super simple. They wait until a segment of an industry has massive bankruptcies. And then when 90% of the capacity goes away, they buy. So they did it in auto parts, they did it in airlines, they did it in met coal, they did it in oil and gas, and now they're doing it in Chinese solar. But look, we have an office in China that we've had since 2007. I've been investing in China since 1996. I love China. I love everything about it. I think they're so good at everything. They're leading in everything from AI to 5G to, they're amazing. But man, people hate China. I mean,
oh yeah,
we can't. We have a China. We've had China funds over the years. We can't even get people to like open our emails, let alone take our calls. So China is hated, and then solar, people are like, oh, there's too much capacity, and like, yeah, that's what's happening. And so there's going to be massive bankruptcies, and so that's probably the one that the people would be the most violently opposed to. I mean, Chinese tech is right behind that. I mean, other than David Tepper, no one believes that Alibaba is a better buy than a U.S. tech company. Mm-hmm. It is. And then beyond, the other one I think I get a lot of hate on. I'm back on energy. Mm-hmm. Oil and gas is not going away.
No.
And one of my favorite commercials, maybe it was 3 years ago, 4 years ago. It was a couple getting ready for a date, and every time they used something that was made of petroleum, about halfway through it would disappear. So the guy's taking a shower and suddenly the water turns cold. And she's putting on her makeup and the lipstick disappears. And she goes to put a fork in a salad and the lettuce disappears. And they go out to the car and the back tire is gone. Everything in our world is petroleum. Yeah. So this idea that somehow we're going to live without it makes no sense to me. So I like that one too.
If you're looking for a simple, secure way to invest and own physical gold and silver, visit our sister company, Hard Assets Alliance, at hardassetsalliance.com. That's hardassetsalliance.com.
What about the crypto space? What's exciting in the crypto space currently? Are there trends that you're following? Where are we in this development?
I'm a long-term, wildly bullish believer in Bitcoin. And mm-hmm. to me, Bitcoin has won as the money for the next 5,000 years. So gold was money for the last 5,000. Bitcoin's money for the next 5,000. It's the transition from analog to digital. Look, money is an asset that exists in the absence of a liability. Gold has been that. I mean, we had puka shells and stone wheels, but gold has been that for 5,000 years. Now we have a digital version, which is more divisible and more portable.
Yep.
Same scarcity. So I think it does that. And so therefore, what does that mean? Well, that means that a single ounce of gold has been a single ounce of gold for 5,000 years. But the value of that gold has changed from mm-hmm. single pennies to, $40-something $100. The gold didn't change. The monetary unit changed. And the problem with currencies, there have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. The oldest today that's still surviving is the pound sterling. And for a pound note, you used to get a pound of sterling silver. Today, it would take you 174 pounds to get a pound note. So it's just not, it's not the same. And the pound note didn't change.
Yep.
It's just a piece of paper, a piece of linen. Someone posted a picture the other day, like $50 bill and $100 bill. What is the difference between these two? Belief and custom, right? You believe one is worth 50 units of effort and one is worth 100 units of effort. That's just a belief and custom. And so the problem with fiat is all fiat eventually goes to its intrinsic value, which is zero. All currencies have intrinsic value, zero. Money has intrinsic value. Gold has intrinsic value. Bitcoin has intrinsic value. But it's belief and custom. So, so that's one thing that I'm eternally optimistic, but it's not going to go up as fast,
right?
Because we're not going to devalue the currency as fast as we did the last 5 years. The last 5 years, we printed more currency in the United States than the previous 245 years. That's just not going to happen again. I mean, we'll print more, but we're not going to Weimar it, I don't think. So that's one. I want to like the whole smart contract universe, because I do believe that there's a role for a world computer, right?
Yeah.
I do believe there is a role. Now, a couple things on this. So one, it's funny. I love to go on, spaces and podcasts and stuff. And it's funny. If I go on a Bitcoin Maxi show, they're like, "Oh, you're a shitcoiner." I'm like, what are you talking about? I own a lot of Bitcoin. Not. And they're like, "No, but you own Ethereum. You own Solana." I'm like, "Yeah. And your point is what?" And if I go on a Solana show, they're like, "Oh, you're a Bitcoin Maxi." I'm like, I own a lot of Solana. Like, I made more on Solana than any investment in my whole life.
Wow.
Not credit to me, credit to Kyle Samani and his team.
Kyle loves.
But, still, I get to spend the money now. Best investment ever in my career. I mean,
wow.
So grateful. And that's just the law of small numbers. You put a small amount in that turned into a big number. But the point is that I'm torn, because there are those that don't want to believe in one or the other. I'm like, but they're not mutually exclusive. They're different. Now,
I agree.
I also struggle. Like, I'm a believer in runes, and the guys will love me. I'll say dog. I like dog go to the moon. And I'm like, how could you like that's just a meme coin? I'm like, yeah, but it's a meme coin on the right chain. And what do I mean by that? I'm a big proof of work guy. Proof of stake has it. To me, it's too close to the old system. He who has the gold makes the rules. I like proof of work, right? You have to do the work. And so I own a couple NFTs, and, dubious value. What is value? It's in the eye of the beholder, but they're worth something, thousands of dollars, whatever. Yeah. I don't want them on a chain that points to an AWS server. Mm-hmm. That's not on chain. That's kind of on chain.
Totally.
I want it on chain. Like my PFP is on the Bitcoin blockchain. Now there are those who say, well, that's polluting the chain. I'm like, why? I mean, it's there. It's not causing any stress.
I was not expecting for you to come on here and talk about runes, of all things. And those essentially, those are, for the people who don't know, those are inscriptions on Bitcoin itself, canonical. And there's a debate. Do you debase beautiful Bitcoin?
Absolutely a debate.
I think it's fine. Like, I have a couple myself. I don't know if they're worth anything, but that was the last thing I was thinking that you're going to talk about.
And the thing about it is, the idea of it is so logical, right? If you think about it, if everything's going to be digital, every stock, every bond, every currency, every commodity, every piece of fine art, every building, every private business, if ownership, not the physical thing, but if the ownership and the digital identity, like my driver's license, my marriage license, my passport, if all of that's going to be digital, I kind of like the idea that it's on a chain that can't be seized, can't be corrupted, can't be hacked, can't be turned off. Like, I got in this debate with the Solana guys. And look, Solana's been very—
You're definitely a Bitcoin maxi, by the way.
Kidding. And it's funny because I got in a thing because I said my problem right now with Solana is transactions get vaporized. And oh my God, how can you say that? That is not what happens. We've never rolled back the chain. I didn't say you roll back the chain. I said more often than I like, I put a transaction out there, the network's down, and unless I see it and resend it, it vaporizes. It's not like the end of the world, but it's less than good. And so until you fix that, I struggle. And then, you got all the other things about, well, what about the wash trading and the real volumes? Like, whatever. But we know that it's faster and cheaper. Yeah. and again, I make the Ethereum people really pissed on this. I asked the question, well, if Ethereum was invented today instead of first, would anybody use it? It's a legitimate question, right?
Yeah, it's legitimate.
It's slower and more expensive. So if you had the choice, now, could you say, well, it's more secure, so I'm willing to give up speed? Yes, right? Good, fast, cheap, pick two, like when you're building a house. You can get it good and fast and it won't be cheap, good and cheap and it won't be fast. So there are trade-offs in all of this, but it's because the technology is evolving.
Yeah.
And at the end of the day, I am a technology maximalist.
Yeah.
I love technology. I love working with innovators. I mean, I was on the phone yesterday with this guy in Hong Kong. He's working on a project with Animoca. And I'm trying to keep up. I mean, I really am, but I'm not an engineer. I'm an old finance guy trying to, keep up. But man, he was going deep into the tech. And I say it all the time. Like, I don't understand how you and I can be talking in real time in HD, and I'm staring into a metal and glass box. That just doesn't make any sense to me. And I don't really understand the difference between CDMA and TDMA, but I don't really care. And so I just know that there are people like this guy I was talking to yesterday who do know all the differences between sharding and this and that. And that makes me comfortable. And so I just want to partner with those people. We talked to this guy the other day. He basically invented everything that you do on your iPhone related to the App Store. He coded by hand, like him personally. And then he invented the chip that AMD is now competing with NVIDIA. The current CEO is taking all the credit, but he's like, I built that. Mm-hmm. You can pull up the notes, and I built it. And he's got this new company, and I could talk to this guy all damn day. I mean, now part of it, he's been around a long time. He's done a lot of things, and he speaks my language, old guy talk. But then on the flip side, we talked to this kid. My wife says, you can't call him a kid. That's disrespectful. Like, he's 30 years old. I mean, he's younger than my kids. And so I love this. So he said, he went to Duke, that other school down the road. I call it University of New Jersey at Durham.
Never heard of it.
I know, never heard of it. UNJD, as I like to refer to it. And because 80% of the class is from New York and New Jersey, but it's not 80, but it's pretty high. So he was in the lab and he's like, why does my phone always get hot? It's because the memory's over here and the processor over here and the electrons go back and forth and the wires get hot. Says, what if we use photons? And the guy says, you can't do that. Photons won't go in silicon. It's like, well, it'll go through liquid crystal, right? I said, what if we put the liquid crystal on the silicon? Like, can't do that. So he goes to the lab and he does it. And I'm like, okay. And then even better, I love telling the story. One of the best investments that we ever did was the result of what I call the triple play. So to get the best returns in venture, you need three things. You need a technology cycle. So that 54, 68, 82, 96, 2010, 2024. You need low levels of money chasing deals. So if there's too much money chasing deals, they'll pay too much, so your returns go down. And you need a bunch of laid off workers from a recession. And the last time we had all three up until this year was 96. So in 96, we had this guy, he just got laid off by Bell Labs. And he says to the guys, hey, can I take my project with me? And they're like, dude, we don't know what dense wave multiplexing is. Knock yourself out. And he goes all over Silicon Valley. No one will fund him. And the best part of the story, the only person that would give him money is his retired third grade school teacher, who gave him her life savings of $300,000, which was not a good decision. I'm not saying that was a good decision, but she trusted him. And so finally one venture fund gives him some money. Well, they said, what is it? Well, fiber optic cable, white light, X data. If I shine it through a prism, I get 8 colors. I get 8 times as much data. 16 colors, 6 times. And they're like, no way. Does it, works perfectly, comes, now I'm forgetting the name of the company, but it worked and became a multi-billionaire. And her 300K turned into 300 million. I love that part.
Love it.
So love it. But I can't believe I can't remember the name of the company, but it doesn't matter. So, but he was laid off, right? Nobody was doing the deals. All the venture guys were out of money. And we had the technology cycle around the internet. So we needed to expand the capacity of fiber optic cables. So if you look at today, what do we need? We need to expand the capacity of doing analysis, AI inference.
Yeah.
So this guy says, well, I could take the laser and shine it through a prism, and CPUs work in 2 dimensions. They read words. GPUs process images and read words, but they can go faster, right? Pictures worth 1,000 words, but they're still linear and sequential, and they're 2-dimensional. But he's like, matrix math, which is what inference is about, the way the brain works. Brain doesn't work in 2 dimensions. It works in 3 dimensions. He's like, I'm going to paint the matrix on the crystal and paint it on this side, and then I'll have a 3-dimensional inference tool. And they're like, no way. It works. Just got funding from Bill Gates and Microsoft. And, we're following on. And
That's great.
I mean, now maybe it doesn't work and maybe it's but if it does what we think it's going to do, it changes everything, because
100%.
not having heat in your machines means no more cooling, no more, restrictions on space. You can have all your models locally on your laptop. It'd be awesome.
Yeah. So 24, next 14 years is 2038.
38. Yep.
What do we think is going to be out on that horizon? I mean, my son's getting into quantum now. We're in this period now of AI and crypto. I think those 2 technologies are absolutely intertwined.
We call it blockchain intelligence.
Right. It's the same thing. I mean, you need each other. Like, we can go through X402, like all these different things that are coming together. We keep hearing this quantum thing. Like, what's 2038 going to bring us?
I think quantum is the most likely.
Yeah.
And that's about the right time, right?
Yeah.
I mean, all the guys Long, Rigetti going against Martin Shkreli, which is never a good idea. I mean, whether you love him or hate him, the guy is super smart.
He's smart. Yeah,
I would not be on the other side of Martin on this trade. And look, I think the Oklo crowd and the Rigetti crowd, I think they're all scammers. I mean, but whatever. So, but 15 years, 14 years from now, 13 years from now, I think that's the right. So I think quantum is the next. The problem with quantum, and we've got some small investments, the problem for quantum is computing is really about precision faster.
Yep.
Right? That's what, because we can do all the things that computers do.
They're just doing faster.
Time,
yeah, they're more more efficient.
We can read, we can do math. The thing that is crazy a little bit, like if it's binary 1 or 0, then we can accurately get combinations of 1s and 0s to make the color of your eyes be blue or brown or whatever. Okay. But if I'm 2 states at once, which again boggles my mind a little bit.
Yeah, it's insane.
What happens if you catch it at the wrong phase transition? Well, you get an error rate.
Yes.
Well, the error rate now is unacceptable. Like, if I ask it 2 + 2, I better get 4, 5 9s, 6 9s % of the time, right? 96%, not going to do it. Yep. So I until they can overcome that piece of it, I don't see the practical applications. Like, yes, it can factor prime numbers way faster than a CPU, but who cares about factoring prime numbers? What we need, can you model this, protein, or can you, secure this asset using SHA-256? Now, it's going to break SHA-256. Maybe, but as I understand it right now, given the number of qubits we basically have about as much compute power as my Pentium 486 from 19 whatever that was, 87. So I'm not afraid of a Pentium 486.
Yeah. So as an investor, how do you play these cycles? Is it too early? As you know, 2038 is pretty far away.
No,
Are you still focusing on the here and now?
So it's too early in the public markets. And so
sure.
I will argue that the quantum companies in the public markets are like the .com companies in the .com bust, right? You change your name to .com and your stock went up. I'll give you an example. So we invested in venture, not in the public markets, in venture in this company called Art Technology Group in 1999. And they went public in 2000. And our cost was 50 cents, goes public, goes all the way to $100. Lockup comes off. I call the VC, say, what do you think? He says, I can't talk. I'm an insider, but I can tell you two numbers. Revenue, 6 million. Market cap, 6 billion. I gotta go. And we sold.
Yeah.
Now the stock went down to 4, which, think about it, from 50 cents to 4, 8 times, I would have been pretty happy, but I'm way happier at 200 times. And so I think that's what's going to happen with all of these stocks. Like everyone's all excited about nuclear. I take the other side of this. The problem with GPUs and AI right now is this belief that, well, all we need to do is get more power and have more chips because the chip maker wants to sell chips. Shocking. Ask the barber, do I need a haircut? Yes, you need a haircut. So we want to sell more chips. But again, that's not how the brain works. The brain is not a brute force. This is the most amazing thing. Our brains function on 20 watts. 20 watts, 24/7, 365, 90 plus years,
fascinating.
20 watts, 20 watts. How? And where the watts created mitochondria, all that kind of stuff, but 20 watts. So, how does it do that? Well, like right now, all around you, there's all this stuff, but you're ignoring, and I'm ignoring 90+%, right? We're only focused on the conversation we're having, maybe a couple things in the frame, but everything else in the room around me, my brain doesn't process. That's not how computers work. They have to process everything all the time. And worse, they process it once, then they process it again and again. And so the idea that we linearly extrapolate that power demand makes no sense to me. So I don't think we're going to build a bunch of nuclear reactors. I actually don't believe they're going to build nuclear reactors the size of, my backyard. I don't think that's going to happen. And I think it's novel to try. And people say, well, but there's nuclear reactors on submarines. Yeah, encased in a giant amount of lead, underwater, under pressure, where if something bad happens, it's okay. I mean, not okay, but
not good for the sailors. But I hear you.
Not good for the sailors. No, and look, I got recruited to be in the NUPOC when I was in college.
Of course you did.
And I got on the sub out in San Diego, and they closed the hatch. I'm like, hell no. No way. Claustrophobic. It was because I always had dreams of being Maverick, right? I wanted to be a naval fighter, a naval aviator.
Oh, but, gosh. Well, I
didn't have the right stuff, so to speak.
Yeah. So, Mark, as we come to the end, you got to wrap up. Any final thoughts? Of this conversation has been just absolutely fascinating from my perspective.
No, look, I appreciate one. I appreciate the conversation. Two, I appreciate your allowing me to go off on different tangents. What I love about conversations, I have a buddy. He's a podcaster, and he tweeted one time. He says, it makes a great podcast is you ask good questions and then you shut up. I'm like, no, Scott, that's not. What makes a great podcast is people who prepare before, so they have good questions to ask, which you did, obviously. But then they listen to when you answer and they ask a better follow-up question, which is why we have a conversation. That's what a conversation is. And so I've really enjoyed the conversation, and I talk too much, but I love when people give good questions and good ideas, because I am a huge believer that dialogue and debate in search of truth is what it's all about. And what I really like I say, you didn't expect we talk about runes, because most people would think if he likes Bitcoin, he can't like runes, or if he likes, EVMs, he couldn't possibly like inscriptions. Like, why? Why wouldn't I? I mean, I think, now, God, I'm blanking on his name. The guy that wrote all the rune code. He's got a single name on Twitter, but oh my gosh. Anyway, but I mean, I love the guy. I think he's super Leonidas. He is so smart, and he didn't write the code, but he's the dog promoter. But there's another guy who wrote the code. But anyway, I love these guys because they're so smart and they're pushing the envelope. And yeah, I'm open to the other side that, oh, it's just junk clogging the network.
I hear you.
Show me why. Show me why.
Yeah, got it.
And if you can't show me why, then I'm not going to just believe you because you're standing on principle. It's like the argument of peer-to-peer electronic cash system. Yeah,
got it.
That's what I said.
Awesome. Well, thank you so much for coming on. I have one favor to ask. Next time you talk to Pomp, ask him what Army stands for. And the answer is aren't real Marines yet. And so just make sure you do that for me.
I will. I will. And then I will also say that you and he have now made a bet for 2 weeks from now, or a week and a half from now, for the big game, and aren't really Marines yet. I love it.
Yep. Good. Semper Fi. Take care, Mark. Thank you so much.
Yep. See ya.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. With markets hitting all-time highs, now is a great time to stress test your strategy and be prepared for what comes next. Thank you all for watching. We'll see you again next time.